Welcome back to the rentyourstock.com video series. Let's dive right in and study an actual stock rental example. I prefer to use Yahoo Finance to check stock rental prices, but you can use any financial website you like. For our example today, we will explore Intel Corporation's stock. Intel's ticker symbol is INTC. By the way, there's no particular reason I chose Intel. Almost any company's stock can be rented out to other investors. Stocks that you already own can be rented out to other investors at any time, regardless of a company's size or the industry in which it operates. As you can see, Intel stock closed at $23.18 per share today. Let's assume for a moment that we own Intel stock at this same price, this $23.18. Next, click on the word options in the left-hand menu. For now, don't worry about the word options. We'll discuss the term later. The top portion of this grid is known as the call options section, and it shows you all of the rents that other investors are willing to pay you. The most important column on this grid is the strike price column. The strike price is the price that you would be willing to sell your shares for. The bid column reveals what renters would be willing to pay you in cash today for the option to buy your shares at the corresponding strike price. Let's take a closer look. Continuing with our Intel example, assuming we purchase stock at $23.18 per share, we could now sell the right to another investor to buy our Intel shares for whatever strike price we like. For example, let's say we would be willing to sell our shares for $25 per share. Find $25 in the strike price column, then follow the row over to the bid column. Here you can see that an investor is willing to pay us $1.59 per share in rental income right now if we grant the investor the option to buy our shares for $25 sometime in the future. The next column over, called the ask column, lists the minimum rent that a landlord would be willing to accept in exchange for granting an investor the option to buy his or her shares for the $25 strike price. In this case, the minimum rent a landlord is currently willing to accept is $1.63. Let's pretend we're willing to rent our Intel shares for the current ask price of $1.59. In that case, we would be paid $1.59 immediately. The $1.59 is ours forever. It can never be taken away from us. Now, if Intel's stock price rises above $25 per share on or before January 17th, 2015, our renter has the option to buy our shares for $25 per share. Why January 17th, 2015? Because that's the expiration date we selected. You can choose from several different expiration dates under the View by Expiration menu bar. Keep in mind that the further out the expiration date, the higher the rental premium you'll be able to collect. Expiration dates also affect how you'll be taxed on your rental income. More about that later. Let's say Intel stock does rise above $25, all the way to $31 per share on or before January 17th, 2015, the expiration date. If that happened, we would have received $1.59 in rent plus $25 for a total of $26.59 per share. Now subtract out our original purchase price, remember the $23.18, and you're left with a per share profit of $3.41, a 14.71% return. It's a win-win for everyone, including our renter. He or she only paid $26.59 per share for a stock they can now sell for $31 per share. In fact, our renter earned a higher return than us, a whopping 16.59%. Okay. What if the stock doesn't rise above $25 on or before the January 17th, 2015 deadline? Well, in that case, we would get to keep our shares, and we can either rent them out again or sell them outright at whatever the current market price is. In this example, we're pretending that the stock expired right at $25. Had it been a penny more, that is $25.01, then we would have had to honor our commitment to sell our shares to our renter at the previously agreed upon $25 strike price. But because our shares expired at exactly $25, our renter does not get to buy our shares, and he or she loses out on the rent they've already paid us. In fact, 75% of the time, the strike price is never reached, and we, the stock landlords, get to keep our stocks and rent them again and again and again. That's why we love being stock landlords. And what happens if Intel's stock price drops? Well, just as before, we get to keep our shares and either rent them out again or sell them outright. In addition, we have a sort of parachute. That is, unlike other Intel shareholders, we have $1.59 per share in insurance. Our real break-even point is equal to our original purchase price of $23.18 minus the rental income of $1.59 per share. So our break-even is $21.59 per share. That is, Intel's stock price could drop all the way down to $21.59 per share before we start losing any money. The renter's break-even is equal to the rent he or she paid us plus the strike price. That is, Intel stock would have to be trading at $26.59 per share or higher by the expiration date for the renter to start making any money. I hope you're starting to see the tremendous benefits of renting out your stock. At this point, please pause the video and take the accompanying quiz. You must master how to determine strike prices, bid prices, ask prices, and expiration lengths, and how to calculate both the landlord's and the renter's break-even points before we can move on. In lesson number 3, we will discuss why someone would even want to rent our shares as opposed to just buying them themselves at the same $23.18 per share price we did. Until then, the following explanation should suffice. Investors don't like to put all of their eggs in one basket, so they place small options bets on several different stocks. Think of a roulette table. If you put all of your chips on one number, you just might win big, but chances are you'll lose. So most people in Vegas place smaller bets on several different numbers. It's the same with stock picking. No one knows which companies will be the next Google or Apple, so they rent several different stocks. Because they aren't buying stocks, but rather the option to buy stocks, renters can spread their money out over lots of stocks, just like spreading chips out over several different numbers on a roulette table. In our example, our renter placed a $1.59 bet rather than risking the full stock price of $23.18. One last thing before we get into the step-by-step process for renting out your stocks. Our Intel stock also happens to pay a dividend. Who gets to keep this dividend? Well, the stock landlord gets to keep any dividends so long as our renter doesn't exercise his or her option to purchase our shares at our desired strike price. There's that word again, option. Well, this is one of the few times Wall Street names something intuitively. The word option means just that. In this case, the option to buy our shares. Many retirees effectively double their dividend income by renting out their shares. In our Intel example, we would receive an annual dividend of 90 cents per share plus $1.04 in rent. Why not $1.59 in rent? Well, we did actually receive $1.59 in rent, but we need to annualize the rent for the purposes of determining our annual gross profit. We do this by dividing 365 days per year by 557 days left until the rental expiration date of January 17th, 2015. And then we multiply that percentage by $1.59 in rent that we actually collected. That's how we come up with an annualized rent of $1.04. Next, we simply add our annual dividend to our annualized rent. In this case, 90 cents together with $1.04, you get $1.94. Next, we divide $1.94 by our original investment of $23.18 per share to determine our gross profit. In this case, it's 8.37%. That's a fantastic return. How else in the world can you safely earn an 8+% annual return? If you know another way, please email me. Okay, let's learn how to rent our stocks step by step. In order to do so, we need to first understand 3 very important words: writing, covered, calls. First, the word writing. On Wall Street, writing simply means selling. I know what you're thinking. Then why don't financial advisors just say selling instead of writing? In the words of Upton Sinclair, it's difficult to get a man to understand something when his salary depends on his not understanding it. On Wall Street, it's difficult to get a financial advisor to teach something when his salary depends on his not teaching it. What about the 2 other words, covered and calls? What do they mean in the world of finance? Renting stocks is a lot like being a real estate landlord and renting houses to people. First, you buy a house and then you rent it. It's the same with stock rentals. First, we have to own the stock before we can rent it. In the world of finance, covered simply refers to ownership. Covered simply means that you, the stock landlord, own the stock you're about to rent out to other investors. Quite often, real estate landlords give the renters the option to buy the house once the rental agreement expires. It's the same with stocks. This rent-to-own option is called a call option on Wall Street. You, the stock landlord, get to pick the rental agreement time period and the price you'd be willing to sell your stock for at the end of the rental period, also known as the strike price. So writing covered calls really means selling ownership rights. That's how we rent stocks. You, the stock landlord, are selling the right, the option to another investor, allowing him or her to buy your stock from you at a predetermined sales price. You, the stock landlord, choose. In exchange for that right, that option, the investor, the person renting your stock, must pay you cash today. It is not a deposit or a down payment on your stock. It is simply a cash payment to you that he or she can never take away. As I mentioned earlier, you can do whatever you like with the rental income. It's yours forever. Now that you understand what writing covered calls means, we can actually walk through how to execute a stock rental trade. Please note that options involve risk and are not suitable for all investors. First, let's look up Intel again, ticker symbol INTC. I like using E-Trade, but you can use whichever online broker you prefer. Assuming we already own Intel stock, go ahead and click the Options tab. Next, scroll over and find the January 17th, 2015 tab and click it. The screen now shows you all of the January 17th, 2015 calls on the left-hand side and all of the January 17th, 2015 puts on the right-hand side. Don't worry about the puts right now. I'll teach you all about puts in my course entitled Buy Your Favorite Stocks for Half Price. For right now, we only want to concern ourselves with the left-hand side, the call side. Now, find the trade column on the far left-hand side. Move down the trade column on the left side until you find the row that lines up with a strike price of $25. Now, click Trade. You should now see the Enter Orders screen. Under the Order Type field, select Sell to Open. Remember, writing really means selling, and that's what we want to do here. Sell the right to buy our stock. We're not actually selling our stock. We're selling the right to buy our stock at the $25 strike price. Make sure you choose Sell to Open and not Sell to Close. Open in this case means that we're opening a position, or in our rental analogy, initiating a rental agreement. Under the Contracts field, I entered 1. When dealing with options in general, one contract always equals 100 shares. So in this scenario, I'm going to rent 100 shares or one contract. Make sure under the Type field, it says Call. Make sure the expiration date is correct. Here we want January 17th, 2015. Make sure the strike price is set properly. Again, we're using $25 as our strike price. Under the Price Limit field, select Limit. Limit means that you do not want to rent your stock for anything less than the dollar amount you're about to enter in the next box, which is the Limit Price box. Be sure to select Limit, otherwise you might accidentally rent your stock for whatever price renters are bidding, rather than the rent amount you want. Recall the bids versus asks from earlier? Well, your limit amount is what you're asking for, hence the ask price. In our example, I'm renting my stock right at the current $1.60 bid price. That way, I'm assured my covered call will sell immediately. Lastly, I usually select Good for the Day under the Term field. This just means that if no one rents your stock by the close of the stock market today, you will automatically rescind your rental offer. Next, click Preview Order. Double check everything again and then click Confirm. Voila, you just rented your first stock. The rental income will be immediately deposited Now, there are a couple of important things you need to know before you actually rent out your first stock. First, in order to write covered calls, you'll need to request to have your brokerage account upgraded to a margin account. In a margin account, the cash and securities in your account act as collateral for a line of credit that you can take out from your broker in order to buy more stocks. Don't worry, we never ever use our credit line. It's simply a requirement of the broker. It's free and easy to apply for online or by calling your online broker. Simply explain you'd like to write covered calls, nothing else. Writing covered calls is considered the safest of all options strategies, so you shouldn't have any difficulty being granted the minimum level margin status. Do not apply for more advanced margin accounts, just the most basic one that allows you to write covered calls. Second, despite what I said earlier, you can, in fact, write a covered call, that is, rent your stock, even if you don't own the stock. Basically, you can rent the stock at exactly the same time you buy the stock, thereby reducing the amount of money you need to buy the stock. That is, your rental income is immediately applied towards the purchase price of the stock. All of this happens in one single transaction called a buy right. I don't usually do buy rights because, as you'll see in lesson 4, I usually buy stock in undervalued companies, and sometimes I like to wait a while before I rent my stock out to see if the stock price increases. That way I can demand more rental income. Of course, the stock could go down and I could get less rental income if I wait. More about that later in lesson number 5, advanced stock rental strategies. That said, some investors like to do buy rights because there is only one brokerage transaction fee. Otherwise, there are 2 separate brokerage transaction fees. That is, one for the purchase of the stock and one for writing the covered call. Third, selling a covered call in and of itself does not create a taxable event. If the stock or options are held for at least 1 year, any gains, including the rental income, are taxed at the current long-term capital gains tax rate of 15%. If the stock or option is held for less than 1 year, any gains, including the rental income, are taxed using the short-term capital gains tax rate, which is significantly higher. When we write a covered call, we create what's known as a short position. When you short something, you hope it decreases in value. Using our Intel stock as an example, we were paid $1.60 per share in exchange for allowing a renter to buy our shares at $25 557 days from now. But would a renter pay us the same $1.60 if there was only 1 day left before expiration and Intel stock was trading at $25? Of course not. The renter could just wait 1 day and buy the stock for $25 themselves. Why would they pay $26.60 for a $25 stock? They wouldn't. So you can see that the $25 strike price, January 17th, 2015 covered call, dropped in value from $1.60 all the way to $0. We still have our $1.60. We still have our Intel stock. And best of all, we get to rent it again. We want our rents to eventually drop to $0 because that means the strike price plus 1 penny was not met. And the renter doesn't get to buy our shares. The IRS treats the writing of a covered call as it does any short position. Therefore, brokers like E-Trade will display our short positions as negative dollar amounts. This typically scares first-time stock landlords. Do not worry. This is completely normal. You still have and get to keep the rental income. No one can take it away. The negative dollar amount in your account balance is just for IRS accounting purposes. In the eyes of the IRS, the writing, i.e. the selling of covered calls, generates neither income nor expense. Income or expenses are not actually realized until one of 3 things happens. 1, the covered call expires worthless. 2, the covered call is exercised by our renter. Or 3, you yourself buy back your covered call. Buying back your covered call, also known as buying to close, is sometimes advantageous and will be discussed later in lesson number 5, advanced rental strategies. It should be noted that you may trigger an immediate taxable event if you sell a covered call at a strike price significantly below the current stock price. This is called a deep in the money call, and the IRS has special rules for deep in the money covered calls. So now you know how to rent stocks. To ensure that you fully understand the terminology and concepts described in the latter half of this video, we recommend that you test your knowledge by taking quiz number 2. Once you've mastered the quiz, please proceed to lesson number 3.